Hello folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what shall be a snowy Rocky Mountains tomorrow, it sounds like. I thank you for joining me. We had a kind of a sloppy day today. Remember, we had markets push higher but really couldn't stay up yesterday. Got a swift kick in the rear, came down. Today they more or less defended those positions and tried to keep it up, but they really couldn't get anything going on the upside, and the result was kind of a mixed day all across the board. If we look at the numbers here, we can see composite, where's the Dow? There it is. Dow down 9, 15,967. We had the S&Ps down 3.5, 1788. Composite down 17.5. It was, listed issues held up better again. Composite 3931.5. The NDX was down 10 3/4, 3378. And the Russell 5.9, almost 6 lower, 11,001, hanging on that 11,000 number still. Gold, silver, you really didn't have much movement in anything outside of the equities. In the equities, even though we show, well, some losses, but not huge losses, if you look intraday, and I'll put up, let's just put up like the SPX is a good one, and look at it intraday. Even though it looks like nothing happened, there was a lot happening all day long. I remarked to the folks in the trading room, because I wasn't paying that close attention today, I was working on other things, but you had multiple ABCD structures take place within the day, which was kind of interesting. Pull this down so I can grab this. So if I put it on like a 5-minute, there was an ABCD structure here that didn't fulfill. Then you had one down that did. Then you had another one up that didn't. Then another one down that did. Then another one up that didn't. There was 3 on the way up that couldn't fulfill. Right? You had one here. Well, let me get the right tool if we're going to do that. You had one here that just it did its ABCD down, couldn't fulfill. And you had the same sort of thing happen right here, an ABC structure, and then one more time they tried it. In all of these, you can see they came up short on the C to D. The only ones that completed were the downsides, right? A, B, C, D down. Actually, be easier if I just grab this other tool. It's easier to draw it. You got the ABCD down here. On this one, you actually got, it was a small one. Actually, that one didn't even give you a good one. It was just straight down. There wasn't an ABCD on the 5-minute. So a lot of movement, up and down to go nowhere, right? To go 3 points down. Big day, nothing out of it. So when I look at the S&P, the charts, you go to our charts and look at them, what I see is this thing kind of rolling over, right? And I'm sure you see the same thing. The important thing here is, what is it going to do as it comes back? We've talked previously about the idea that we have an ABCD structure in place that shoots this thing up to about almost 1860. Right? We traded as high as 1802. Now, what it's trying to do, in my opinion, is it's trying to set up another small ABCD structure inside, depending on how far it comes back. Whether it comes all the way back and does a retest, regenerate, it's not that far away. It's about 9 points away. To get another ABCD that takes you up towards this structure, right? Fulfilling this one out. When you have a large one like this, it's going to take a while. And usually the way you get there is you set up a little ones inside of it. So the real test here will be is, how does it come back to that swing point bar if in fact it gets that deep, right? What does it do when it gets here? What does this retest regen look like? And that retest regen, because we're coming back within 6 bars, right? You've got less than 6 bars here. 1, 2, 3, 4 so far. If we come back this week, that's going to be less than 6 bars. Now, if you've read my books, in particular this last one, Trend Trade Setups, on page 129, I talk about some of the probabilities associated with retraces. In particular, those that come back within 6 bars. And the probability of a price or volume failure on that first retrace. So if we go back to the chart here and look at it, and we're coming back within 6, the first thing you got to do is you got to look at what type of trend it is. In this particular case, it's a suspect breakout, right? That's what this is denoting here. That's suspect. So we have a suspect breakout over this high. That breakout, because it's suspect, has a different probability than one that isn't suspect. And if I look at the cumulative probability of either failing on price or volume, in other words, volume expands on the way back, or we get back underneath this retest regen area, right? In other words, all the way back down there, the probability of that happening on a suspect breakout is about 25%. Excuse me, suspect one. Suspect one is 31. Confirmed is 25. So about a 6% greater probability and a 31. So that's almost a 1 in 3 shot that thing will fail as it comes back. So 66% probability almost that it will hold, 33 that it will fail. So when you look at it from that perspective, this is not a slam dunk, you just load up the truck. I've talked about the case where it's more than 6 bars, and those probabilities are extremely high. I've told you several times before, and I think I've been actually quoting the wrong numbers. I went and pulled them out tonight to make sure. Those probabilities are much higher. For example, a confirmed bullish coming back is only like 8% failure on the first retrace if it's after 6 bars. Very high probability. 92% are that it's going to flip around and go back the other way, or at least get some sort of a bounce out of it. That's what that thing's talking about. That's what those statistics are talking about. That statistics over all stocks over about a 13-year period that I looked at, which included major bull markets and bear markets, which is why I chose that section of data. So I just thought I would throw those probabilities out. If you haven't looked at that book, it's got a lot of stuff like that in it, which gives you these kinds of things so that you can measure, right? Because you want to be able to measure how these things come back. If we go look at, the Dow looks almost the same. There's really not much difference there. So if I pop over to the Dow, the Dow is just starting to try to turn. It's 2 dojis up here at the top now. So no volume. It's just, just hanging now. And in the Dow has been the strongest one, right? Ever since we changed the makeup of the Dow, and I actually did an article today, if you want to read it, which is kind of interesting about the financial sector. Ever since we changed the makeup of the Dow Jones and the S&P, because they both are overweight financials. As long as those financials keep moving up, those indexes are going to do better than the other indexes, and that's what we're seeing. That's what we're seeing here. And once we get to the XLF, you'll see it over there as well. Composite. Now, the composite, the NDX, the Russell, these have been the weakest. And what you're seeing here is a different story. And this is where you really have to take a hard look at what's happening and decide whether or not this is going to hold, right? Because we're coming back into a retest regen into this area. That area, we're almost at the bottom of it. And I need to get a different color because you can't see across that one. So if I look at this retest regen here, right? That area is right at the bottom now. We don't have the volume as we're coming back compared to that, and also compared to our breakout bar, don't have the volume either. But we are seeing this come back and do a full retest regen. This thing's going to have to flip around and head back the other way, because if it doesn't, right, that's going to fail. And if that fails, that's going to put more pressure. The other thing it's doing is it's coming into this big bar from November 7th. The NDX is doing the same thing. So I would be careful watching these, and then of course the Russell itself. The Russell's coming back, and here on the Russell, it's coming into that November 7th bar as well, and that's also a problem. So what I mean by problem is that these things have to flip around. If they start getting deep into it, we're going to get a much deeper retrace. So if they flip around here, the things can actually go back up, set up that ABCD structure, move back the other way. If not, we're going to get a deeper retrace. And so tomorrow, Thursday, is going to be the big test on this to see how they hold up or don't hold up. If I look over to sectors, the sectors are about the same. I don't really see much difference in the sectors. And I see a note here on the refreshes. Yeah, I'm not getting as good a throughput. We had problems yesterday. We also have it today. We were looking at it today trying to figure it out. So hopefully we'll get that restored and back to normal pretty soon. Let me go to the sectors real quick. Where are the sectors? Here we go. But thanks for the feedback. Most of the sectors are all doing the same sort of thing. I'll just start with the IYT. So here's the IYT. They're all coming back in to do a test of support. Now the IYT is a little different in that the support is so far down because of how strong it's been, and it hasn't had any volume on the push. And so there's just really no good place up here to draw support. But if you look at the others, like let's see, like maybe the consumer discretionary. Here you can see coming back into support, right? Volume's picking up a little bit, coming back into support. How's it going to act as it gets back in there? And that's true of most of them. The strongest sector, XLF, that sector has been holding really strong. Today, didn't even want to give it up. It was the strongest one all day today. That top 21.27, it got to 21.26, so you actually didn't go over and back under. This to me is, this is the key sector for the S&P, for the Dow. If it can hold up, it's going to be very hard to bring these things back. So XLP, definitely, XLF, definitely one to watch. The other one that's been extremely strong, XLI, this is the industrials, and they also very strong, holding up here, barely coming back. A little bit of volume pickup today, but folks, this has been a heck of a run. I mean, it really hasn't. If you were on the wrong side of this trade, there was no place to get out. If you wanted in, there was no place to get in. Right? Support's down here. We'll see if it gets back that deep or not. But these have been the strongest two sectors. They continue to be the ones to watch. I'm looking over my notes here to see if there's any other ones. There's a couple. Actually, there's only one doing a retest regen already. That's the energy sector. And so if we look at the energy sector, you got a pullback immediately off this swing point high. It's testing into the bottom. It actually has as much volume so far. So this one's up for grabs. We'll see if it can actually hold or not. There was big news about Berkshire Hathaway buying into ExxonMobil. You know, ExxonMobil is a huge piece of this particular index, or this sector, and you can see the run that this thing made. And so that XLE has been basically buoyed by the fact that Berkshire has bought into this stock, and now of course you're getting the piggyback buys into the stock. You've got a very large ABCD structure in place here. 1, 2, 3. It would actually it's not that large. I thought it was bigger, but as I look at it, I can see spots that. So it really has to go from here. I got the wrong bar. Let me go grab the right one. So it really goes from here to there, back down and up. So that was actually kind of finished its ABCD. So it doesn't look like Exxon's going to be the one driving this thing, if anything does. Auxiliary markets. Let's look at those. There's really, again, we're hanging at the tops again. We've done this forever, right? We go up, and then we just won't come back. And that's one of the reasons that if you're in stocks, you've got to find a way to stay with them, because a lot of times they simply don't give you good entries if you get out. And so, yeah, if you're going to get out of something, you really want to try to rotate it into something else that gives you more opportunity and try to stay equally invested, because over time, it's just not giving you a lot of opportunity if you exit. Dollar. Last night we were talking about the dollar tested and held. Tonight it actually fell 21.73, 21.72. So it's just underneath it. Has no volume, right? This still looks like a retrace that wants to try to retest and head back higher again, but so far it hasn't. Just like we talked about with the indexes, on the Russell, on the IXIC and the NDX, if we can't hold and get back out of here within a bar or two, right, then you have to start thinking about deeper retraces, and that will be true of the UUP. And if we flip over and look at the FXE, this particular index, or shall I say currency, doesn't want to give it up at all. 133.71. Yeah, it's over it. So, you know, what can I say? It's going to go back up to this high. I thought we would fell into resistance. We're into resistance deep now. The last bar of really serious resistance, 133.96. It tested that today, closed underneath it, fell again. Tomorrow, this thing really needs to turn if it's going to, because last night it looked like it was going to turn. But then again, today you go right back the other way. So this is at a point where it has to turn, or that was the extent of the move on the way down, and then you're going to get some sort of a range trade out of this thing. That range, you actually have two of them, right? You have the range it's in, and then you have the top half of it up here, which is about the same size. So if you don't get a push back here within another bar or two, this thing's probably going to take off and at least go up and try to fill the gap, and then maybe get all the way back to the top. So curtains on the dollar again if that doesn't hold. Okay, so if we consider the bigger picture. It's hard to get too excited. And I'm not going to go over most of the rest of these markets. They really didn't do much. Gold, silver, same thing, right? Still trying to test the bottoms or work their way down to the bottoms. Oil still testing the lows, trying to flip. You just go down the list, same thing we talked about last night, same thing tonight, no changes. But if we go back to the S&P, or even take one of the weaker ones, let's just take the IXIC. And look at, this weaker index. It's hard to get too concerned about what you're seeing at this point. You've got a swing point lows way down here. Now, if we got down there and started to try to break it, it might be a different story. But if you consider the fact that we still don't even have, and I'm trying to grab this bar and bring it over, we don't even have a swing point low here yet. Once we do have it, that price point there is going to be 36.50. Right, let me get this over so I can see it. I believe it's 36.50. Yeah, 36.50. We're trading at 3,800, or roughly, right? 37.90. Excuse me, 39.31. I'm on the IXIC, not the S&P. So you're going to have to drop 250 points to get back to that swing point low. You can't change trend on the intermediate term basis unless you break a swing point low on that time frame. So that means to get down there and break this thing, and this is going to print, right, because we're not going to go down there and test it this week. Well, I just don't think we're going to go down there. I guess anything's possible, but that's kind of a far-fetched notion. 36.50, you'd have to come back, whatever that number is, 270 points. Probably not going to do it. So that prints a swing point low. So now you got a swing point low down here, which has to be broken to get a change of trend. Right? So this would have to be broken. Folks, that's a long way down. I mean, 270 points on this index is, what, 7%? That's a pretty good move to get back there. Can it happen? Can we get that kind of a retrace? Yeah, it's possible at some point. But to get there, just consider how you have to get there. Right? Just take a worst case. Let's just say we come down straight away here. And I'm gonna pull this back in. And let's just, take a scenario, just play it out in your head and say, okay, we come down, and let's just say we break this thing, which is going to be hard to do if you're going to fall that far that fast. Where's your support? Well, probably the bottom of this support zone is not a bad spot, right? You've got some good support in this area, swing point highs. That'd be a retest, regen into that area. Okay, so then you'd probably get some sort of a bounce out of it, and then maybe you set up an ABCD structure. Where does that get you? Well, that gets you down, maybe down into this area. How far do you have to go? I mean, we're talking about, it was 3,600, right? You gotta break this bar, right? I believe that's the bar. Let me get this off so I can see the number. 36.50. Yeah, that's the number. That is the swing point bar. That is the swing point low on the weekly. So you got to break this. To get down there is going to take time. Now, I mean, sure, you can just crash, but those are not high probability odds. So my point is that even if this market has topped, it's going to take a while to even get down to a point where you really have to really worry from a longer term perspective. And that means there's a lot of trading in between here and there. And given how much this market has punished anyone who's tried to short it, that's not the high probability bet still. So, take it for what it is. Take it for what it is. All right, somebody texts me here. They want to look at a couple things. Let's see what they are. And then there's a question over here. I'll address that while I put these in so we can look at them. The question from X is tomorrow, Thursday, news days, FOMC meetings tomorrow. Do you think it will be more meaningful than news has been lately? This whole week is nothing but is nothing but the Fed. It's all Fed speak every day. It's, the Fed keeps telling us it's going to be data dependent. Then you got these guys coming out and saying, yeah, but we're probably going to have to, there's a possibility that we could tighten in December. These guys aren't going to tighten. Next spring, late spring probably at best. So, I think the whole story here, or the idea, is that if you tell people enough, eventually when it happens, they won't be as, shocked. Well, that's not going to be true because when it does happen, they are going to be shocked. I don't care how many times you tell them. After it happens a couple times, in other words, you start tapering, right? Then the shock factor goes away. But until that happens, you can tell me as much as you want. When it happens, then it's going to be a shock, and then it'll be a shock for the first couple, and then it'll go away again. In other words, it will be expected. So, I don't think the Fed speak is going to do much more at this point. It's just a bunch of people yapping, and they're not really telling you anything. As far as the FOMC meetings, the minutes, that's a little more important. I mean, it actually shows you how people vote. It shows you what comments took place inside. I expect in this particular meeting, you're not going to see much more than you saw in the last one, and that is it's going to be a split board, and it's going to be a close decision. Maybe not as close this time, but still, I mean, there's going to be people on both sides. Some saying that we should pull back some, taper some, and the majority saying no. And I expect that, I don't think the Fed is going to make a big difference until we get out to February, March. I think the anticipation sometime late January, February is probably where you'll see the Fed really starting to make an impact again. Because right now, how can they tighten? They're not going to tighten in December. As soon as Yellen comes in, they're not going to tighten on the first meeting that she attends. I mean, that would be like suicidal. So that means you're out until March or April. So it means you worry about it a couple months ahead of time. So no, I don't think so. Yeah, CPI doesn't. Actually talking about CPI, retail sales, home sales, jobless. The Philly Fed is the only one there that would concern me because that's going to tell you more about the economy. CPI, there's not going to be any. Retail sales, if anything, they're a disappointment. Home sales, probably mixed. Jobless, those numbers come out every week. PPI, same thing as CPI. Philly Fed, that one actually could do something. Let me go and take these couple that were sent to me here. So let me see, what was it? One of them was YGE. Let's see what this one looks like. And the other one's OLED. So YGE, this is Chinese energy. Well, the first thing I see when I look at it is you just broke a swing point low here, and you did it with volume escalation, right? That's not a good sign. And then what you're coming into, and on the other side of that support zone, you hit it with volume. So you potentially could get a little small bounce here, but I suspect this is going to go lower. And if we look over on the weekly, there is probably what you're looking at. And over there, you got this big bar probably that's standing out at you here, the swing point high. And that comes in right at the top of this support zone, which is what it's hitting. And you're not going to have nearly that much volume. So over here on the daily, yeah, you can get a little bounce out of this thing as a result of it, but I expect it's going to come back and try to get into it. And you had an extremely long tail here, which also tells you that you've got people who probably when this thing rose back up, they were the ones selling in this area. So you don't, it's not like they're going to come in and support it, right? That's what you're usually looking for. So I don't see this as a, that's not a great bar to have big volume on, because it was actually a disaster bar, right? The way it traded. So I think if you're wanting to buy this, you just got to give it time, let it come in. I would let it come into the bottom of this zone on support. That would probably be the place to look at it. That price point is 433. And that's quite a ways down still. The other one was what was it? YGE and OLED. Let's see what this one it looks like. This will have to be my last one for today. Okay, so on the weekly, you test over the highs you fell so far. On the daily, you had a nice push up on volume. It's pretty thin stock. You're doing 500, 400, and then every now and then big spikes. So it pushed up there with 1.06 and broke 7. Yeah, the deal here is this is just going to hold it back. So this one doesn't look as bad, but this one's going to hold it back here. The volume's not going to be there on weekly, I don't think. Let me do the math on it right quick. So we've done 1.6. This is Tuesday. So that's 8 times 5 is 4 million. And what does this bar got on it? 6.3. So you're not going to have the volume. I think this is going to contain it. And so if you're wanting to buy it, what you want to do is you want to buy it back into the top of this bar at the best, right? What you'd really like to do, you got multiple swing point breaks here. That's a good thing. So what you'd really like to do is see it get back somewhere in here. That would be a great buy down there. So I just give it a little time. I don't think you have to rush into it. See how deep it will come, if it will, and see if you can get it deeper in. All right, folks, I'm going to have to leave it at that. Thanks for being there. Take care of yourself, and tomorrow I'll catch you again. We'll do it again. Tomorrow's going to be an important day. Tomorrow, the next day. I think those are the days where we're either going to find out if this market's going to push back the other way or more down. Hard to bet against it, though. I don't think that's the easy bet. Until next time, take care.